About Zijin Gold as well after its adjusted net income rose around 180% in the first half. Let's get more from Michelle Leung. She's the head of our Asia Metals, Mining and Sustainability at Bloomberg Intelligence. So gold prices certainly have been interesting, right? When you talk about how they've basically stopped rising, right? How do you think that impacts a company like Zijin Gold in the next few years?
Well, actually, as you mentioned, Zijin Gold did a very good first half. It was rising by 180% and accounts for around 44% of the consensus already. However, while we're still constructive about the gold price coming forward, I think the 51% year-on-year growth in the gold price is unlikely to repeat in the second half. So that's where the volume growth to kick in, and it will become a more important driver for its earnings. The company itself is expecting 26% year-on-year growth in its full year production, and going forward is still expecting 15 to 27% growth as in production by 2028. So in my view is that this company, the earnings growth could be shifting from the gold price driver to the volume growth story.
There was an investment in Allied Gold. What does it mean for the earnings outlook? How does it change the earnings outlook is my question, I guess. Right.
I think it is a good move for the company instead of acquiring the company at a premium. Now it decides to invest $295 million for 9.2% stake. If in terms of valuation, we calculate that it implies an equity valuation of around 4.5 billion Canadian dollar, which represents around 18% discount to its previous offer and 2% discount to Allied Gold's current valuation. So it's quite a good entry for them to gain the exposure of Alliance growth. However, they do need to give out a very big capital at the upfront. And of course, the valuation right now is more attractive as well.
Yeah, and tell us a little bit more about Zijin Gold International. I mean, they deliver strong earnings, strong production growth. Do you think the stock deserves to trade at a premium to some of the peers globally?
To be honest, this company always trade at a premium to its peers. I think that's also because of their potential growth, and also its consistently delivered growth as well. And if you look at its past M&A transactions, it's always done at a very good record in terms of its cost and in terms of its execution as well. And also its unit cost has been coming down as well if we exclude its royalty. Well, royalty increased because of the higher gold price, but if excluding that its unit cost actually come down. So I think the market is paying for that. And in terms of valuation right now, it's trading at 7.2 times EV per EBITDA, which is only slightly higher than the global peers average of 7 times. So it is not too much premium right now. I think it explains the story.
All right, Michelle, fantastic. Thank you so much. Our Bloomberg Intelligence head of Asia Metals and Mining.